Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, July 25th, 2013. Well, a continuation of the trend to the upside today, a candle that's made a higher high but a lower low, and therefore doesn't change the prior trend to the downside, and the prior trend was actually to the upside. So technically that trend to the upside continues. For the previous day's trading, if you recall, we had a spinning top type candle, and it did raise some serious doubt about continuation of that trend to the upside. Combined with the market testing to around the bottom of this highlighted zone of previous resistance, there was a good possibility of a change of trend. But if you recall, I mentioned that we had the cloud down below where the market was trading, and it did suggest that there would be very, very solid support for this market moving forward, and we've actually seen that support today. The area around 131.96 is at the top of the cloud, and combined with the area at the cloud, it did ensure that the buyers came back into the market and that the sellers lost commitment as they were trading down within the cloud, and that's highlighted by this shadow on the current candle. Now we have a very, very large white body candle, and that suggests that the buyers have made some very strong net bullish progress on the day between the open and the close, and suggests that they've found the solid upside momentum that we have seen previously in this market, in this second time frame uptrend, since the market's been trading from down around this 127.50 level in very, very solid bullishness. The buyers have also closed with control, so we are seeing very strong commitment from the buyers in this market and some very solid upside momentum. One thing to watch out for here, however, is that we are now trading within this zone of resistance, and the zone extends up to around this 133 level. And we see here previously where there was some price rejection following a very strong bullish candle, and that is still a possibility. That price rejection didn't last for very long, and the trend continued back up on its way, so we do need to watch that. But just above there we also have strong resistance at the 133.20 level, so very solid resistance overhead, so let's watch those levels for potential to continue trading to higher levels. If we see a strong bullish breakout up above 133.20, we could see this market quickly trading up to the 134 level, so that could be a move that provides some good strong impetus for the market to trade to substantially higher levels. If we do see this market come off, the bottom of this highlighted zone may act as support, so that's at 132.50, but then also we have very solid support down around the top of the cloud and the 131.96 level, so very solid support down below where the market's trading at the moment. In terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend that the market's in to the prior time the market's trending up, and if you recall previously I suggested there was a possibility of a change of trend with the market interacting with the 100% level and then this indecisive spinning top type candle. We did require confirmation of a change of trend, and that would have been a candle with a lower high and a lower low. Now we've had an outside day in bar chart terms, a day with a higher high but a lower low, and doesn't confirm a change of trend, so the previous trend remains in force. With this bullish breakout up above the 100% level, it does suggest that this market may have the momentum to test up to the 161.8% level of 133.63. We are a long way away from that at the moment, so it is a target. We may not see any interaction with that level for some time if we do continue this first time frame uptrend. And the Fibonacci retracement is also giving us a similar scenario here, with the bullish breakout up above the 161.8% level. Previously we had the indecisiveness around that level, suggested there was a possibility of a change of trend. We haven't seen that occur. Bullishness above the 161.8% suggests the market can trade to the 261.8%, which is at 133.57. In terms of the pattern that we saw previously, we had this symmetrical triangle, not a perfect one, quite large in relation to the trend leading into it, but the target that we had for it was the width of the pattern projected up from the breakout. That gave us a target up around this major swing high around 134, just above. And the way this market's trading now, it does look as though we are a possibility of achieving that target. Early days yet, we have achieved half of that target, so that's a some good momentum from this market. We do need to watch how the market reacts over the next day or so. As I've mentioned, we do have strong support down below at the top of the cloud, and that will provide a solid floor for this market. But the market is trading within that highlighted zone and may provide a barrier to higher levels. In terms of Ichimoku, obviously a bullish market in all three time frames, with the market trading above the cloud, above the Kijun-sen and the Tenkan-sen. And the Tenkan-sen is pointing up quite sharply, reflecting this solid upside momentum that we're seeing in this market at the moment. For today's trading, the market is trading close to the Tenkan-sen. We've seen rejection from there as well, and that occurred within the cloud, so obviously the influence of that coming into play. So moving forward, obviously the area above the highlighted zone around the 133 level and up to 133.20 may hold a strong resistance. We should look to solid support around the 132.50 level, and then the area around 132, 131.96 around the top of the cloud should be extremely strong support. We are looking for a potential breakout up above the 133.20 level on a bullish basis. It could see the market testing up to 134.